All right, join me for a quick market update and what has been a wild week in the markets, and we'll discuss UVXY, what's going on, and what to look for coming into next week. That's all coming up next in Short Vol Show Live. Thank you. All right, and as they drop the trailer, the first official trailer for the final season of Game of Thrones this week, the markets are in turmoil. And I did see an interesting article including the president, talking about the president being very worried about the markets, et cetera, et cetera. Friday, we saw just more of a deterioration in the E-minis in the market, and we saw the VIX go to higher highs. Really, what I look at most at this point is I look at the E-minis. Once again, I've said this before, but let me see if I can pull up the chart of the E-minis here and get out of the way. I'm particularly large size here today. Let's make me a little smaller. All right, so this is the E-minis, and that's not the chart I was looking for, but let's look at the 1 year. There's the 1 year, and it's been widely reported that we've made no progress this year, really. Let's go to the 3 year, though, and you can see this, and this is really important to me, this chart, and it dominates my thinking about the markets these days. Looking at the charts of the broader market, and we see that well, first of all, like I just said, that we've basically made no progress since this time last year. At this time last year, we had sold off a little bit, and then it looks like we rallied for 6 months of the year and then sold off again. And you can see that we've kind of oscillated back and forth. If we close in a little bit here, you can see there's the 10-day. Let's look at the 20-day. And you can see from the 20-day, okay, this gap, these up moves here are, first of all, the midterm elections, the uncertainty of that being over. A lot of times we get sort of relief at just, regardless of what happens in the midterms. And the midterms seem like they went off pretty predictably, and that what was predicted to happen wasn't a huge surprise. But there is a relief at that question mark being out of the way, and markets rallied on that. And then we saw last Monday, we saw a rally on the heels of the G20 and the tariffs supposedly being pushed back. But then quickly, we had a reversal of that rally and a sell-off into the week. And we had this very violent move here on the 3rd, which was like about 10 minutes of just straight down. And that had sort of a level of violence that we haven't seen in a while, and was a little bit of a red flag for people. And then since then, we've had a continuing deterioration where it looks like people are just sort of giving up on the market. And that's when my sort of capitulation video came out here a couple days ago, where like I was discussing how when people can give up on the market, that can be a bottom. It really looks like this is going to be obvious to most market participants, but it looks like we really have turned into a different chapter of markets here, where stuff just chops around, and that can continue. It definitely seems to make sense to me that if we lose this area here of, let's say, sort of 2550, that volatility is definitely going to go higher. It's definitely going to scare some people if we lose this 25. It looks like 25.29 was the low back here in February. If we lose that point, it's definitely going to scare some people. And volatility will go higher. I mean, the VIX could go higher from here at some point. So, it's been a tough trade for volatility players as well. Let's look at UVXY. Now, UVXY for the year even with all that's happened, yeah, UVXY a little slightly up on the year. So this could be an up year in UVXY. Now, it wasn't a huge, if you'd been short UVXY the whole year, it wouldn't be like a huge loser here, right? You would have lost, well, I don't know, maybe it would be. Let's see, UVXY, it said pre-split would have been like, what, 43 here, up to 65 now. So yeah, that would be a loser, a pretty decent loser. Of course, if you sold into UVXY like up around here after that Vomageddon, then it would be a big winner from now. But either way, this last year does not convince anybody about the short vol trade being a profitable, easy way to make money shorting volatility. No, it's been a roller coaster ride. And I get some criticism having a show called the Short Vol Show. People kind of oversimplify that to mean, well, this guy's a perma bear. He thinks volatility is, he's always shorted. And I know that people that know me don't think that way. And actually, the Short Vol Show is just sort of a jumping off point to explore concepts in the marketplace, such as volatility and the term structure. And my hope for people that watch is just that they get a better understanding of the term structure and volatility so that they can trade long, trade short, trade in whichever way it can be. I also hope that people understand the concepts behind the short vol trade and contango and what short vol trade has going for it, and then they can make their own informed decisions. Now, the common thought would generally be that, okay, here's a picture of the VIX right now, okay? This is the VIX chart, and the common thought might be, let me see if I can make this a little bit bigger as I'm talking to you, that volatility, look, it's been oscillating up and down, that it's gonna oscillate back down again soon, and so if you're short it, you can at least take short-term profits, and that seems like a reasonable assumption to me. Now, but it could also go higher, and I have somebody who's betting me $1 that UVXY will touch 100 in January. The actual precise wording of the bet is not totally clear, but the one I was proposing is that UVXY closes above 100 someday in January. I was betting against that. But yeah, the point here, though, is that whether the VIX goes up or down from here, if it does go higher, let's say we touch 30, that will represent a good selling opportunity. I believe that here it could go up or down from here, but for me, the bias would be to the downside. But certainly, if it goes higher from here, it will represent a selling opportunity. Let's look at what I've discussed in the last couple of months and how it would have fared. Well, the advice that I've been giving, A, keep small, and B, use farther out stuff, still would have been good advice. If we had gone back here in July or August, if we had put on a March spread in UVXY, let's say we put on the March 50-40 put spread back here in July or something, it would be a slight loser right now, but it would still be, we'd still have time to go for March, and it wouldn't have lost that much money, and it still has a chance at being successful. So, and even if you had shorted a small amount of shares in one of these vehicles, it still has a chance to get back lower, and if you have enough time, it will make it back down there. Certainly, there were opportunities in each one of these up and down moves to buy and sell. If you had bought, there were several spots where you could have bought here and several spots where you could have sold. And as long as you weren't, selling the bottom or buying the top, there were opportunities to make money all along the way here. And I would continue to look, if we're going to continue in this choppy market, which I can't tell the future, but we may very well, look for these shorter term opportunities to get in and get out. Somebody was talking on Twitter about putting on a straddle earlier in the week, and they were talking about that a little bit on the Volatility Views. Check out Volatility Views Options Insider Radio with Mark and Mark Longo, Mark Sebastian, and ATG. It's always good stuff. But if you're looking to take advantage of a short-term little move, like, for example, if we get a big pop in UVXY on Monday and it goes to 73, 74, then you might want to look at a short-term play for volatility to retrace down. And if you're looking for a short-term play, you want to pick options that are like close to expiration. So, for example, maybe the December, I would say for a short-term play, maybe the December 21 strike or the December 14 strike would be a good short-term play if you're just looking to capture some deltas for a short-term move. You might be looking to do that to the upside too, and same thing. These options are a good spot for a short-term move to capture that. If, however, you and at some point we will go back into contango and this will continue lower. It's not just going to turn around and go up forever. It will continue lower. And to capture that, move farther out. I keep saying it, move farther out. Now in UVXY, there's not a lot of liquidity out to June, and even in VXX. Now, just to update everybody, VXX will become VXXB in January. So if you pull up VXX, you'll notice there are no options after January, and that's because it will switch to VXXB. So let me see, why is this not working? Now, although VXXB does not have a lot of volume right now at all, if we pull up like volume figures here, you'll notice that there's not volume here at all. It will be more liquid and easier to get stuff done in than UVXY in most cases. And that's a function of the market makers just knowing that it doesn't move as quickly as UVXY, and there's just more liquidity in VXXB. And look for VXXB volume to increase as it becomes the main traded vehicle. You can see here there's almost no volume in VXXB in the options that VXX covers, but in the options that are unique to VXXB, you start to see some volume here. In fact, last week we had, on Friday, we had all this volume in VXXB, which is pretty significant compared with what the open interest was. So people are starting to get onto VXXB now, and I would consider that as well if I were you. Once again, if you do believe in the short vol trade and you agree that things will come back at some time into contango, take a look at some of this March or June in VXX. VXX or VXXB, they're the same thing. Probably the name change will get switched back from VXXB to VXX once VXX falls off the sheets. I would look at something along the lines of a June 35, 33 put spread, or a something along those lines, or even like a June 37, 34 put spread. These trades, if we get a spike in volatility that continues for another couple months, these trades still can be profitable, and you're not going to get huge paper losses even with a spike if you're working out to June on some of these options. So this is a good way to play the fact that things will come back into line at some point soon, but it's a longer term play. This isn't the kind of play that you would necessarily take off when we get a down day. This is something that you would probably leave on for longer. If you wanted more of a short term play, I would look at more front month stuff like VXX, any of the DECE options, or UVXY, any of the DECE options. But things could stay choppy for a while, and in my opinion, it's the major indices which have always been running the show, but which are really running the show here, and which we need to keep watching very closely. A lot of people talk about the president and the president's effects on the market, and whether the president's policies have an effect on the market. And of course, you have to say they do have an effect on the market. However, markets operate independent of who's president or what's going on, and that is just one factor. Now, sometimes politics the market seems to follow them very closely and seems to react very closely. At other times, the market seems to be focused on completely other things. And as I've said before, I don't think that the president can't just figure out some way to fix the market necessarily. They can try to do stuff, but it's not necessarily going to quote-unquote fix the market. I wanted to talk about APHA just for a second. APHA has been in the news with these short sellers coming out and this really devastating Hindenburg report seeking alpha article, and then a YouTube, and then these other short sellers coming in and coming with a report on the stock. I would encourage you to actually take a look at the report that the short sellers gave at the conference. Here, I'll put up this video for a second so you can see it. This is the one I would look at. It's a fascinating report that's just devastating for the stock. And I really think that this stock could go the way of Sun Edison. Possibly it could actually go to zero at some point, so I would be very careful with it. Gabriel Greco, please check out this this video, Gabriel Greco video. I will put a link in the description to it. It's it is just fascinating for those who follow the markets to see this report on how they set up these shell companies, and they bought like a pharmacy in South America and made it seem like it was a pharmaceutical company, but was just like one branch of a pharmacy. And all these people that are supposedly on the boards didn't even know they were on the board of these companies, and it all goes back to this one guy. Now, APHA has responded back, but I would caution people to try to scoop this stock at the bottom and think it's going to come back, because most times in these situations, yeah, you might get a pop back in the stock, but it could just keep grinding lower after that. And if we look at APHA, we got a pop on Thursday and Friday, but I would look to fade that pop. I don't think it's going to be very meaningful. I think we're back down to just nobody cares mode for this stock. So let's just take a look at the price action this week in APHA. And we see this is when the short seller came out on the 3rd, and then we see it just grinding lower. And then there was a response, and you see this big rally on the 6th. But I think that this is it's sort of a relief rally. Maybe things were overdone, but I think that this is going to grind lower from here. I'm not saying that I can predict what a stock does, but I'm just saying, like, I've seen this situation develop before with a stock, and new blood comes in here, and a lot of like stock player type retail people come in here, but there is not a catalyst for this to move a lot higher right now. In fact, the fundamentals that it were based on, even at $5, that's valuing the company at like over $1 billion. And don't get confused at like a cheap, quote unquote, cheap stock price means that a company is valued at a discount. You have to multiply the number of shares outstanding by the stock price, and you have to figure out the company's financials to figure out what its valuation is. And if you look at APHA, even at $5, that's a high valuation for it. So if you were going to get long this, I would do it very short term, but I can see this definitely just grinding back down to 4 here in the next week. So please be careful on this one. I know it's tempting to buy something that's come from way up above, thinking that it's going to retrace, but not every stock retraces. Or, you know, people talk about filling the gap, and that concept is can be a fallacy a lot of times. Anyway, I don't want to make this too long, but the market does look sick. We're not out of the woods in this. It's a different market than last year. Please be careful, folks. Thanks so much for everybody's support. I've gotten great support this week, and tune in next time. Check out the interview I did, and I will be back to you early in the week. Until then, trade safe, enjoy the rest of your weekend, and we'll be ready to go on Monday morning. Thanks for watching, folks.